It's George Beyrouthi from FS Securities. It's a stockbroking firm here on the Gold Coast in Queensland, Australia. And every Monday I go through what happened the last few weeks and try to speculate on what is likely to happen the next few weeks based on technical and fundamental analysis. Let me start with what happened over the last 2 weeks on the American market as well as the commodities. You can see here the first two columns, you got 1 week change in points and in percentage. However, I combined the first 2 weeks, the last 2 weeks together, and give me information about seeing the big picture. So we have here the Dow, which of course the top 30 US stocks, was down only slightly last week. But when you combine the 2 weeks together, you'll find that the market was down 3%. Most of the drop was actually the week before last. On the Nasdaq and the S&P 500, we've seen a small changes on the upside last week. However, when we combine the 2 weeks together, we see that the Nasdaq was down 3.5% and the S&P 500 was down 2.9%. Now, in terms of the US dollar, we can see over the last 2 weeks it was down 0.3%, and interestingly enough, the Australian dollar versus the US was dropped even further, nearly 1.5%. The euro was strong, and the sterling was actually, cannot be right, it's weak. Okay, now in terms of commodities, look at gold. Gold over the last 2 weeks was actually up 6.7%. The bulk of it was actually last week. Silver was up 3.6%. However, what you can see here, last week was actually up 4.8%, but when you combine the last 2 weeks, it was up 3.6%, which tells me that 2 weeks ago silver was down by at least 1.1%. Commodities. Now, in terms of light crude oil, that's the West Texas crude oil, over the last 2 weeks was down 6.4%, and the bulk of the drop was actually last week. And guys, if you're really interested to find out more about all the other commodities such as natural gas, wheat, corn, soybeans, coffee, etc., all you have to do is call us and we'll give you some more information. Now let's have a look at the Australian market. The ASX 200 is our market gauge. It contains the first 200 stocks and makes up nearly 50% of the index. When the two sectors, the financial and the materials, which make up a big content of the 200 index, when both of them are up, the market, generally speaking, is up accordingly. And when those two sectors are down together, collectively, the ASX 200, the index, actually reacts accordingly. What we've seen here, the financial was actually down 3.2% over the last 2 weeks. The bulk of it was actually last week. The materials, on the other hand, was the other way around. Last week was slightly down, but over the last 2 weeks was down 4.05%. When you combine those two together, we end up with the total market, that's the ASX 200, the top 200 stocks, which makes up at least 50% of the index, was down 3.8%. Now, when we look at our stocks, we look at and see the last 2 weeks, AMP, funny enough, was up 6.4%. Newcrest Mines had a very, very good run the last 2 weeks. The bulk of it, the rise was actually mainly the week before last. Combining the 2 weeks together was up nearly 15%. Suncorp was up 2% over 2 weeks. So you can see here 3% rise last week, but 2.1% rise in 2 weeks, which means that 2 weeks ago the Suncorp stock was actually down, recovered most of it last week. Again, if you want a copy of those slides, all you have to do is call us. Now, just to give you a very quick introduction about what happened on the weekend, the Dow was down 0.3%, slightly down. The S&P 500 was down 0.7% and the Nasdaq was down 1%. BHP was down 2% on the weekend, so we expect BHP will be down on Monday. Rio was down 3.7%. In Europe, the Stoxx 50 index, which comprises most major European markets, was down 1.2%. The FTSE 100 index in London was down 0.4%, and the DAX was down 1.3%. On our market on Friday, the market was up 16 points or 0.3% to 6,584. Best performing stock was AMP, you've seen that before. Suncorp was also high by 4% on Friday. Worst performing stock was Rio, down 0.9%, followed by Wesfarmers, down 0.8%. Telstra was almost unchanged at $3.98. And on Friday, 36% of our stocks advanced and 20% declined. The Nikkei on Friday was up 0.4%, and in China the Shanghai index was down nearly 1%. Okay, now look at the volume, because volume is actually a relatively leading indicator. You can see what's happening when the market has got volume, either on the up or down. What we've got on this chart, on the left hand side, we've got the advances, this line here, 38%, 35%, 35%, and you can see on the last 3 days of trading, the advances exceeded declines. But when you look at the previous 5 days, you'll find that the declines exceeded, actually by a greater percentage, exceeded the advances, like 50%, 44.5%, 35%, 34%. Now these are the daily volume. You can see even though the last 3 days the advances increased and were above the declines, but to look at the volume was going up as the market was selling, and then when the market was buying, where people were buying into the market, the volume dropped. So a lot of concern in the market despite the rise of 3 days. If you look at the big picture, the weekly, over the last 10 weeks, you can see that the 2 last weeks we've had major correction and the declines exceeded the advances. So these pictures tell you, 100,000 words more or less. It gives you a good impression of where the market is heading. So in summary, what we've seen so far indicates to me that we are likely to see either moving sideways for maybe a few days, or maybe even a decline over the next few days. So it's not really time to put money into the market as far as we are concerned. Of course, there are a lot of geopolitical issues, such as China versus the US, trade war, Brexit. We don't know how Brexit is going to end up. Are they going to have a no deal and walk out with no deal, or they're going to have an election in England? All these uncertainties create upheaval and uncertainty in the market, and traders and investors either move sideways or take profit and wait. Now this is a mechanical system. It helps us to actually have a bigger picture of the market. We've designed that mechanical system based on 8 indicators, and we need to have 5 of the indicators telling us one thing on 2 time frames. Now if you look at the last 5 weeks, the Dow was relatively bullish until the beginning of last week, when we started to see the decline in the market. And you can see here the investor, which relies on long-term indicators, hasn't really changed a lot. So we're still bullish on the trend for the investor. However, if you look at the conservative trader all the way down to the very aggressive trader, the Dow converted to neutral. The Nasdaq and the S&P 500 remain bullish. Okay, so gold, we had a volatility, high volatility, slightly bullish, neutral, mainly neutral. Then we went very strongly bullish, and last week we've seen some selling and profit taking. and we ended up with neutral for all the traders. However, the investor remains bullish. Crude oil, we are now more bearish than we were the week before. Okay, the Australian dollar, we've gone with a high volatility time from slightly bullish, slightly more bullish, neutral, slightly more bullish, and then bear. We've seen now the bear signal for the first time in 5 weeks. Is it likely to go down below 67? Well, it may, but I feel that they may have a support around the 66 cents by the end of this week if it gets there. That will be a strong resistance and will push it back up. Okay, now this is the graph. The technical analysis come from the graph, and this is the Dow. Here you've got the weekly, and here you've got the daily. You can see that last week was a very volatile week. It opened high, slightly below the close of the previous day, but it's actually relatively high on the day. Went all the way down, dropped quite a bit, and in the last hour recovered most of the losses. In terms of the daily, we've had quite a number of red candles. You can see here 4 candles with at least very close to 10% reduction, and then picked up steam and went up. And we're sitting now on that line, which is the 100-day moving average. Is that going to end up to be the support, or is going to end up to be the strong resistance? Time will tell. Now, using the mechanical system for our local market, you can see here that most of our sectors remain bullish, with the exception of materials, which has gone from bullish to neutral. So we don't expect the price of iron ore, which dictates how BHP, Rio and Fortescue will head. We don't expect the price of iron ore to go back above $100 US per ton anytime soon. Gold, strongly bullish, and so is industrial, and so is telecommunication. All the others, they may be bullish for the investor, but neutral or bearish for the traders. Looking at the chart, here we can see a better picture. On our market, this is the ASX 200. Last week, we opened very high and then went down, further down, and recovered a bit in the afternoon. It went from a high of 6877 down to 6490. That's almost 5% in 1 week. If you look at the daily, look, 1, 2, 3, 4, 5 red candles, indicating 5 days in a row the market dropped. The last 3 days, with a relatively speaking lower volume, the market went higher. I would not be surprised to see that 100-day moving average, that's the pink line, will become a support for the ASX 200. So it is very likely the market may drop back to 6,460 something and then recover. It will use that 100-day moving average as either a support. If it breaks that support and goes below it strongly, we would actually start to see that that pink line becomes a resistance. Now, looking at our stocks and how we compare the last 5 weeks, what we expect may happen this week. If you look at the last 5 weeks, we end up with CIMIC, that's the old letter holdings, very bearish. So if you're going to trade a stock, one recommendation would say to you, go bearish on CIMIC. You can actually trade CFDs or you can trade options on CIMIC, CIM. Rio, because of the price of crude oil, because of the price of the iron ore, we've seen gone from one bear, 2 bears, and 2 bears. So it's actually for the aggressive and the very aggressive trader. this is actually a nice trade for you to go short on Rio. Woodside Petroleum also gives you an opportunity. For the last 3 weeks we've been very bearish. So again, if you want a copy of the slide, all you have to do is call us. Okay, well, that's all from us here at FS Security. I want to end up by saying to you that we've done some CFDs trading, and you can see here when we open at $500, within a short time, within 4 weeks, we were making about 74% profit, and in 5 weeks we ended up with nearly 665, 133% profit in 5 weeks. And we end up with our disclaimer, and we say that everything we said to you today is only of general advice nature, because every trade can end up losing money, more than the money that you put in. So before you take any action, and as we don't know your financial circumstances, please consult with us or with your professional advisor. And if you have any questions, all you have to do is call us and ask those questions. How to find us? Well, you can write to me at george@fssecurities.com.au, or you can call me on my mobile 61, that's the Australian code, 61, and then you don't need the 0 if you're ringing from overseas, 411-259526. So at this end, I can wish you happy trading. Keep aware of the risk in the market, and don't put more money that you cannot afford to lose. And again, all our advice is of general advice only. Have a good week. Enjoy trading.